Now, this morning's top three things in my notebook. Number one would be the Japanese yen. Really, Japan could be number 1, 2, and 3 every single day this week, or really for the last couple weeks of beta chasing. Don't forget, the S&P 500 has a 0.94 correlation to what's going on in the Japanese currency. So that's point number one. We'll go through that. Point number two, I'll go through Europe. And then point number three, we'll go through our least favorite major U.S. equities indice, which is the Russell 2000, which is now down for the year to date. Now, getting into Japan. Japan is number one, signaling immediate term trade oversold on the Japanese yen. So you really need to pay attention to this because the entire market is trading on yen down. So when it's oversold, that means it can bounce. So again, watching that line, 118.64 is the immediate term oversold line versus the dollar. You can easily bounce to 116. So again, watch this. I think that's why the Nikkei was only up 0.1% overnight. Again, the juice has already been played through here. So again, the juice being people sell yens and buy Weimar Nikkei, and it goes straight up 20%. Oh yeah? Okay, so that's point number one. Point number two is Europe. Now, you can buy Europe on the chart. We would argue that our version of the chart doesn't look good, but again, you can buy the chart until they report the economic data. So again, this morning's economic data, whether it be the German PMI, the French PMI was disastrous. I mean, that number this morning was 47.6. And this is a November number, I might add. A lot of people, Bloomberg fully loaded earlier in the week, saying Europe recovering from what? Headlines, advertising, what are you talking about? The data in and of itself from Japan to Europe continues to slow, and we would reiterate that this morning in French short selling terms. So EWQ is, of course, our short selling mechanism, EWQ being French socialism, or France on the equity side is what we like there. And then the final point in the top three things would be the Russell 2000. So again, something happened along the way to 2014, which is a great bull market in stocks, with the exception of the 2,000 of those stocks that are in the Russell 2000. So the Russell 2000, just again, newsflash, is down for the year to date. Again, after telling people it was breaking out and everything else, I heard everything last week. Look at the Russell, it's outperforming. The Russell has been underperforming disastrously this week. It has for the year to date. It has since July. Since the July all-time closing high of the Russell bubble, it's down 4.2%. So for those of you who are keeping score at home, if you bought the Russell at the all-time high, you need to be up about 5% from here just to get back to break even. So those are your top three things. Now,